What's going on, guys? I'm back, kind of. I'm currently in Europe. That's part of the reason why there's not a lot of videos coming out right now. But still active trading. We're still managing our portfolio. And obviously on the market research side and the trader development side, I'm still active every single day. So I want to go ahead and upload a video here, probably about 10 minutes, kind of just jotting down my thoughts, answering some reoccurring questions that I've got from some of you guys on YouTube, and also answering some of the trolls out there a little bit here. It doesn't hurt my feelings when people want to be mean to me, because at the end of the day, the only thing I can control is what I do with my money, and this has been a great year to be long in the markets. If you're mad about that, that's totally fine. Go talk to your wife, your girlfriend, your boyfriend, your husband, a psychiatrist, your dog, anybody. I don't really care what you do with your cash. If you're praying for my downfall, totally fine as well. Does not hurt my feelings. First things first, biggest question I get, can this market continue to go up? I have no idea. I think that's part of the reason why most people like to hear me talk. I don't know what the market's going to do. My ego and my opinion has absolutely nothing to do with this. I strictly follow price. I'm a reactionary trader. I do not predict anything. What I will say is that momentum and trends are up. Everybody that was crying about divergences across market breadth and momentum and everything else as of the last few days, those arguments have been rather invalidated, right? So we are coming up towards some price targets that we set back in December/January of earlier this year. We expected these to be hit at the end of the year, and here we are on June 20th, and these are being hit now. It's absolutely mind-blowing to me that the indexes have moved this fast, but it's also a testament to not try to predict stuff, just react to it. You can make a lot of money if you can take the ego out of it and just focus on price, right? And that's what we do inside of TTI. We're focused on price through trend. Is it up, down, sideways? We're looking for absolute and relative strength. We want to own the strongest stuff in the market. And then obviously we want to own things that are moving quickly, momentum, right? So when all those three things align, obviously we want to take a position. It's been a great year to own stuff that are exhibiting those characteristics. So first things first, SPY. We're kind of looking at the 555, 560 area for a brief consolidation, a pullback, some profit taking coming up on a bigger level than what we've seen earlier this year. Wouldn't surprise me, though, throughout the end of the year, if we were up and over 555, 560. This is the fourth year of a presidential election cycle, and seasonality dictates that this year is supposed to be fantastic. And by the way, this year has been fantastic so far. So SPY, we're coming up on that 555 to 560 price target. We expect some consolidation there. The Qs, we're looking at the 490 to 500 area. We're currently trading 488. By the way, we're gapping up into all-time highs on both SPY and the Qs. We're expecting some consolidation or some pullback, some profit taking in between the 490 and 500 area. If that does happen, you have to ask yourself as a trader, is that a time to buy or is that a time to sell and run for the hills? Shorter term traders are going to be looking to short any sort of weakness. Congratulations if you could do that. That's not something that I want to do. I want to continue to buy strong stocks even as they pull back, because this year has been a fantastic year to own stocks in leadership roles, right? So Qs, the S&P 500, these are both working out very well. Let's look at IWM really quick. Second question is, when is it time to own small caps? So we had a small cap thesis coming in at 2024 that small caps were probably going to have a really good year because we saw the big rally Q4 of 2023. That has not been the case. It hasn't been a terrible year for small caps, but they have underperformed. Therefore, we don't want to commit a lot of capital towards small caps until they start to outperform the market, which right now they're not doing. It's nice to see that they're holding their previous resistance, now turn support, that 200 area. We continue to consolidate above it. We do expect small caps to run eventually, but until they do, it's going to be a relatively small portion of our portfolio. A majority of the positions that we take inside of TTI are going to be large and mega cap names, because that's what the market is giving us right now. So as of right now, we're not shorting small caps. We're not necessarily out of all small caps. We are taking certain types of setups, but it's not a significant portion of our portfolio, right? Tech is the leading sector. If you don't own tech right now, what the heck are you doing? If you think this is going to end poorly, you're probably right. But if history is any sort of leading indicator, this probably has a lot longer to go than most people expect. And that's kind of what we're seeing here. Most people didn't expect XLK to really start rebreaking out above the 200 to 10 area. This is where our first price target was, once again based back in December or January of this year. We got a little bit of consolidation there and then a shot right through it, leading through semiconductors right now. Most people don't expect this stuff to happen, which is why I think it's still happening. The market loves to screw as many people over as it can, and right now there's just so much disbelief that this market is doing this. There's so many people that are either on the sidelines with cash saying, I'm going to wait to buy the dip, and the market loves to punish those guys, as well as people that are shorting into strength, right? Some short squeezes, stuff like that. There's not a whole lot of open short interest in the market right now. looking at some of the dealer positioning, the big boys positioning in the market, there's not a whole lot of shorting, but there is a lot of complacency. There's cash on the sidelines waiting to buy a dip, but every time the market dips, like the bigger players aren't buying. They're still sitting. It's like they can't believe what they're seeing, and I think that's part of the reason why the market's in runaway mode right now, because at some point you're going to be forced to buy this stuff, and if it's 50 to 100% higher, you're screwed, because at that point you're really at the mercy of everybody else that got in before you. And that's when pain trades can really start to manifest. So semiconductors in particular have really been leading the market. But is this out of the realm of ordinary? No, semiconductors led last year. Why is it weird to see them lead this year? I don't care about the idea behind it, the fundamentals behind it, the economics behind it. You're a goddamn technical trader. You focus on price, guys. Price. Which direction is price going? What are the industry leaders? Are you in NVIDIA right now? Are you in TSM right now? MU? Are you in QCOM and AMAT? Right? ARM? Are you in these names right now? If not, there's a significant amount of alpha that you are leaving out of your portfolio. Alpha meaning the amount of profit you can make outside of just owning the S&P 500. Can you beat the general index? If you can, congratulations. It's been a hell of a lot more easy if you can own semiconductors in this type of environment, because this is the leading industry group, right? So semiconductors, once again, I don't care what people think, if the bubble's going to burst, whatever, you're probably right. But if you're afraid to be on the left-hand side of the bubble, if you're afraid to own stocks here, or here, I don't want to hear anything when it starts to break and you pretend to short at the perfect time. It's very, very hard to do that. Bubbles are a great place to make a lot of money as long as you're not the last person holding the bag. And if you're actively trading the market, you should have some sort of measures in there to see you don't have to absolutely time the top to get out of this stuff, but you should have some pretty good indications that maybe there's a top starting to form. As of right now, there is no top forming, at least that I can see. Relationships are holding up well. You have the leading stock in the market continuing to run. This is absolutely crazy. Just for transparency, I do not own NVIDIA. We own a lot of semiconductors, but personally, I don't own NVIDIA. This was a hard trade to get into, but congratulations to everybody that held it. This has been the trade of the last year, but potentially 2 years, right? Absolutely insane. We do own names like ARM right now that are gapping up into all-time high. This is currently my biggest trade on the books right now, the most profitable trade that I have this year. I really love this trade, but we also have names like MU, TSM, QCOM, AMAT. Can you see where we're going with this? Every single one of them is gapping and running into all-time highs. There's no reason to not own this stuff. As of right now, would I open it? Probably not. You're probably going to want to wait for some sort of consolidation range that you can risk on, risk off of. A lot of these semiconductors gave us the opportunity to get in earlier. If you missed it, that's okay. I don't think the run's over, but you're probably going to want to go ahead and wait. We have a price target here on 185 on TSM. This is a name that I talked through in one of the YouTube videos. If you took it, think about managing a little bit at the 185. This contract currently up in between 400 and 500%. Guys, do not be afraid to own things in uptrends. Don't try to time the top. Have a good time. If you're naturally bearish, some of the best traders and investors in the world, Stanley Druckenmiller, is naturally bearish. He looks at things and goes, man, I don't understand how this can happen. But that does not cloud his judgment from owning uptrends. And I think that's one of the biggest things. You can naturally look at something and go, I don't know why this is happening and I don't trust it. But you don't have to know why, and you don't have to trust it. Define your risk. Know how much you can lose in a trade and buy the breakouts in bull markets. And obviously in a bear market, we're going to be looking to short. So that's what I got for you right now. If you have any questions regarding any of this stuff, it's been a fantastic year to be long in the market. So really quick, let's go ahead and I want to show you two things. The Robinhood account, I think the last time that I showed you guys, it was at like $9,500 or $10,000. This is an account that Mike and I inside of TTI started in January. We're trying out a bunch of different strategies to implement them into TTI's trading system. We've been able to almost 10x this at 20K. It will officially be a 10x. But look, the big winner here is ARM, right? This is up 2,400%, up $7,000. And we owned it back in January 11th. We opened it up. So here we are, $19,000. You guys have been kind of following along with this Robinhood account. Here we go. I haven't added anything to the account. I just continue to buy dips and strong stocks, and we obviously use options to leverage our bullishness. Things are working out really well right now. For those of you that are on the sidelines, just complacent about this market, the market doesn't give these types of opportunities often, right? This has been a really good year to be long in the market. But the good thing is if you've missed it, well, you have 6 more months of this stuff. Are we hitting some sort of top? Probably not. But when the market starts to move in spurts, like it is right now, market's moving in spurts, you have to be able to push the gas pedal down and make as much money as you can before the eventual pullback or the consolidation range. Because I'm going to tell you something, even if you were bearish, this was not an easy time to be short the market. You had like 5 days to really make money before we found some sort of floor and started to bounce again. You have to be very aggressive as a short-sided trader in a bull market, which we are. This is second-year bull market stuff, guys. It's just easier to be long. Really quick, if you're interested in following our types of trades, etc., we do offer a market research package, if you will. Link is in the description below. We send out 1 to 2 emails per day. All of the trade ideas that we send out, you can take with us. We have weekly webinars, etc. You can kind of see exactly what they look like. Actually, we give out scans and reports, show you what the trade ideas look like. This is a great way for you to be able to leverage our work and make it work for you. You might not trade exactly like us, but you can kind of get the general idea of why we're doing what we're doing and add it into your repertoire as a swing trader. Great example here of the trade idea with Microsoft. You can see that you get a chart, you get all the pertinent information, you get our entries, our stops, and our take profits, you get the options contracts we're looking to trade, and then commentary as well. Lots of different stuff here for you guys. If you're interested in joining us and taking the trades with us, we also have chart requests and stuff, so you can actually chat with me on a day-to-day basis. Feel free, link is in the description below. And I think that's all I got for you. I'm in Europe right now, so the video uploads are going to be more infrequent, but this has been a fantastic year. I appreciate all of the positive comments that I read through on YouTube. And for those of you that don't like me or don't like the way I trade, I don't take any of it personally. I really don't care. As a matter of fact, you can do whatever you want with your money. And the market does need bearishness. If you're shorting into all-time highs, you are inadvertently just giving me money. Whether you're going to pay on the market research side or you're going to pay through the market, you're giving us money, the bulls, and that's totally fine. You can do whatever you want. You're a grown adult. My name is Hamilton. I'm here at the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. Let me know what you think. If you want me to blow my account and lose everything I got, probably not going to happen this year. Might happen in the future. I have no idea. Been a great year to be long. Talk to you later.